Let's unpack those market movements now with Grant Nader, who's a senior portfolio manager at Benguela Global Fund Managers. A very good evening to you, Grant. And let's start with the local bourse today. Quite a bit of losses across major indices today. Resources, some of the biggest losers. Financials not doing too great. And I suppose some of that is owing to the rand, which is at around 19 rand against the US dollar. What would you say were some of the biggest drivers for the weakness that we saw to begin the week?
Well, yes, it was a tough day, and it was definitely led by the precious metals and the resources. The platinum stocks, Implats, Amplats, and the like, down 9%. You don't see that too often. Sibanye down nearly 6%. And then also Sasol down over 5% post its trading update. And really, I think coming into today, we had the weaker data out of China last week, and the concerns around the property sector and the potential default from one of their largest property developers, Country Garden, that putting the skids on commodity prices globally, concerns around global growth, and of course that's a big driver of our commodities and our exchange. So that put a real dampener on the market today. The only few highlights came through the likes of MTN with its trading update and its announcement of a partnership with MasterCard around its fintech offering. I think that market took that very well. And then a handful of the food producers on a broker upgrade. Other than that, there wasn't much to get excited about.
Not at all. And if you're a shareholder in Absa, definitely not something to get excited about when it comes to the retail customer, Grant, and them defaulting on their repayments. So they are posting higher profits because of the high interest rates, but ultimately that retail customer is really struggling to keep up with debt obligations.
Absolutely. I mean, their revenue grew by over 12%. And translated into meager headline earnings growth of just over 2%, which does highlight the benefit, as you said, of rising rates being offset by the rise in credit loss provisions. I think it must be noted that they do indicate they expect the credit loss ratio to improve in the second half, almost as if we're seeing the peak pain scenario. So let's hope that's the case. They have operated well. Africa did well. But broadly speaking, you are seeing some sort of pain and slowdown across all their borrowers coming through in Absa's numbers.
Another slowdown, Grant, is in the mining space. Exxaro coming out with an update as well, them indicating as well that profits are going to be significantly lower. I mean, it's a story that's been told by much of the miners with the lower commodity prices, the slowdown in growth in China, which is a huge importer of our commodities. Your thoughts on that update?
Well, Exxaro came out saying they expect earnings to be between 27 and 30% lower, which sounds quite difficult. But if you consider the context, so in August last year, this time last year, coal was trading at $280 a ton. It's currently 57% below that, between 100 and 120. So in some respects, it was actually quite a creditable performance. Add to that the difficulties around the logistics. We can't even ship all the coal that we produce. So I would have to say that it was quite a creditable performance from Exxaro in the context of these challenges around load shedding, around Transnet, and the falling coal price that we've seen over the past 12 months.
And what about Sasol, Grant? Them giving a similar story there, operational challenges impacting their earnings by over 80%, they indicated. You did say that share price didn't do too well on the JSE today. What did you make of the update that they shared?
So yes, they had a very messy update. Again, just a trading update, but there were a lot of one-off impairments. The biggest one being they've written down the Secunda operation by 35 billion. It's a non-cash impairment, but nonetheless, it did create that significant amount of noise around the earnings. And just stripping it through to the core, they expect the adjusted EBITDA down between 2 and 16%, which if you consider what oil has done, the logistical challenges, that's not a bad result, but they are struggling with margins as oil has fallen, as chemical prices are falling, global demand is under pressure. Sasol has really got a lot of challenges right now. The only thing that has really helped them is the weakening rand. It's somewhat softened the blow, but of all the factors that are out there, most of them are going against Sasol right now.
Yeah, and then just very briefly, if you will, Grant, Italtile, we can see a struggling consumer there. They've cut back significantly on spending, consumers, and that is reflected in the update that was posted by Italtile today as well.
It's not a company I follow closely, but I was surprisingly impressed with the update. They expect earnings down between 0 and 16%. And if you remember, they're still suffering from the post-COVID hangover. You're only going to tile your floors once every 5 years, not every 2 years or so. So a lot of the home improvements that people did are embedded and in place. And there was that elevated base. Cashbuild came out recently with numbers that were down 40%. By comparison, Italtile had a very good number in the face of a struggling consumer, higher rates, and a lot of competition, according to them. So I actually think fairly solid under the circumstances.
Yeah, indeed. Thank you very much for that update, Grant. He's a senior portfolio manager at Benguela Global Fund Managers, and that is your business.